Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh.
Welcome to Wealth Matters podcast. I am going to talk to Mr. Brian Kasal today. Brian is awesome because he's doing exactly what I am trying to do or I am doing in investment world. It's just that he is most probably 20 years ahead of me. So I'm looking forward to this episode. He's the CEO and founder of FourStar Wealth Advisors LLC, an SEC-registered investment advisor firm headquartered in Chicago. Brian holds an MBA from the University of Chicago's Booth School of Business and has been a guest lecturer for the MBA program. So if you guys don't know, Booth School is like the top 5 in the MBA program. So welcome, Brian.
Thank you. Good to be here. Really appreciate it.
Oh, absolutely. So, Brian, we always start with this question with every guest. Tell us something interesting or funny about yourself.
Well, something we found out in our early discussion is that you're Gujarati and you're from Ahmedabad. And so is my wife's family. They had migrated to Bombay by the time she was born, but they're all Gujarats.
Wow. Who would have thought that we'll be talking about Gujarat on this podcast.
Chicago, right? Exactly. Yeah.
Oh, that is amazing. So, Which assets do you invest in right now, and why?
Well, we're a full registered investment advisor, so much of our work is in traditional stocks and bonds. But as an investment advisor, we have a lot of flexibility. So we have a broad platform of alternative investments, but that also can include cryptocurrencies, then cannabis, a lot of different real estate deals, and a whole series of things. And my background originally, when I did the MBA at University of Chicago, a group founded the Hyde Park Angels, which is the largest angel network in the Midwest.
Oh, wow.
So originally an angel investor and like kind of like Shark Tank. That was my first alternatives before we even did Bitcoin and things like that.
That's amazing. So and my podcast is all about alternative investments, right? And I do the exact same, from ATM investments to cannabis to, of course, real estate is the biggest part of my portfolio, about 50%. Yeah. But then I want to look at everything else because real estate is good and boring, gives me good passive income. But of course, I want to take some asymmetric risk. That's why I dabble into startups, to angel investment, and of course, cryptocurrencies. So we had been mining cryptos since 2017, and recently we launched our own fund, mining Bitcoin, and both the funds were oversubscribed. So it's a great place to be in, right? You have so many choices now. It's not just stocks and bonds. And I keep telling people, you got to know what is out there, right? Otherwise, you are stuck with the same things Wall Street wants you to know about, or the government just wants you to invest in, stocks and bonds.
Well, so and it's easier for them, if you're on a well-worn path. But the big returns are usually in other more aggressive investments. But there's plenty of mistakes made as well.
Yes.
So you could a lot of money if you're not careful. So you have to do it smart.
Yeah, and we'll talk about that as well. So what was your own first investment and when was it?
My own first investment was in a bank stock, which sounds really boring. Okay. A young rookie stockbroker at Payne Weber. And the manager said, buy a bunch of stocks for yourself. And the best thing that ever happened to me is that my first stock went down. Because if it went up, then you think you know something, right?
Oh, yeah.
Right? You'll make big mistakes. So my first stock went down, and I realized this isn't as easy as I think it is.
Right. So many people have beginner's luck, right? Especially in last 10 years, they all think they know everything. When I talk to them about real estate, they're like, oh, yeah, no, we get 20-30% return in stocks per year. I'm not going to worry about anything else. Because it's beginner's luck, or it's just because, government is putting so much money into the economy.
Well, that's what's going on right now.
Exactly.
Yeah. So between the Federal Reserve and the Trump administration, now the Biden administration, about $12 trillion is in the economy in over a couple of years. We haven't done $1 trillion prior to that.
Exactly.
we don't know what's really going to happen because all asset prices are going up.
Yep. Everything's bubbled up. People think that because I'm smart. No, because your dollar is losing value. That's why they are going up.
That's true. That's true.
This is very interesting. So can you share, you finished your MBA, you started with angel investing. So that was your first foray into alternative investments. And then what happened? How did you come up with FourStar? What was your journey like?
So I did the MBA after about 20 years in the industry. So I've been in stocks and bonds for years. And then my wife's in real estate. So we've bought and sold rehabbed and owned homes and beach homes and everything else. So we've done a lot of that stuff. But then when finally I did the MBA, I learned about angel investing. And then just recently I did some cryptocurrencies and I really didn't know much about it, right? So nobody knew much about it.
Right.
And you learn more about it over time. And it was been an amazing experience. But, there's a lot of things that we don't understand about it. Nobody understands about it.
Yeah.
And hopefully they keep going. Just today, the Chinese government decides they're going to outlaw cryptos for their people. So now everything's today, but it's not down to zero.
Yeah.
So it'll go up again. We'll see what.
Yeah, China will keep doing that because they introduced their own stable coin, digital yuan. So they have to stop all these transactions.
That's right.
The thing is, though, it's not easy. Saying is one thing, because I know so many Chinese, they are using VPN and they're accessing everything.
Yeah,
they haven't had any issues, right? So it's it's one thing but of course I think China can still do that, but America or Europe cannot do that because we have freedom of speech, we have our own rights.
That's right.
No one can just come in. So but it will be interesting. So 5 years ago I have been talking about Bitcoin and Ethereum. No one wanted to listen. When it's in the media, then people start taking notice, right? When Elon Musk keeps talking about it, Jack Dorsey talks about it, then people take notice.
That's right. Absolutely.
No, this is great. So what was your then first alternative investment? What did you do? And how did it work out?
So we did some alternative investing through the Wall Street networks. We did Silver Screen Partners, which was film investing in film. And that went very well. We also did some oil drilling investments. There's a bunch of ways to invest in oil. You can invest in the oil itself in the ground and drill. You can buy the land and own the royalty and
mineral rights. Yeah.
Right. Or you can just buy the cash flows from it. So on our platform at my firm, we have all these different opportunities through the form of partnerships. But I started doing it as a financial advisor in the 80s early on, got involved, and some of it went really well. And some of it didn't go well.
Yeah.
They're picking the right thing. So.
Somehow oil and gas does not work for me. I tried twice and both times it just did not work. The drilling side, I just want cash flow.
So that's all considered alternative. You can buy oil stocks, but if you invest in oil partnerships or you invest in private partnerships, whether it be Silver Screen Partners was back in the 80s, then there's equipment leasing programs. Now as big as Cannabis, wireless assets. So many opportunities out there in alternative investing, including, of course, cryptocurrencies.
Right. No, I agree. There is so much. I was looking at it, the life insurance thing where you can buy life insurance of other, elders, which somehow did not jive with me because I don't want to wait for someone to die and buy their life insurance contracts. But that is some people are doing. You can also, I heard about this from a friend, you can finance lawsuits.
Yes.
Yeah, I'm like, there is so many alternative things out there now. It's so easy. And with all the accredited investors, crowdfunding and everything, anyone can just get in now.
You can. And there's so many private partnerships that you can meet individual investors and invest like with friends. But then if you want to work through an investment firm that's a registered investment firm, they have a process they have to go through. Right. But we are litigation on our platform.
Yeah, litigation financing.
Yeah. So, and the key is just like a stock portfolio, you diversify alternatives. You don't put it all in this. You don't put it all in real estate. You don't put it all in crypto. You try different things. Diversify.
Yeah, it's the same diversification. This is the word I keep talking to everyone about, right? Because that's what the fund manager tells you, that I'm diversifying your portfolio, blah, 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 but it's still in stock market, right? The entire stock market corrects at the same time. But if you are diversified in real estate, to cryptos, to a lot of other asset types, then you are truly diversified. And even in real estate, as you said, you can be doing development. You could be investing in mobile home park. You could be in senior housing, apartments. So even just from the asset type in real estate itself, you can diversify, truly diversify between different markets.
Yes. Well, and very much for years, the alternative investing space, whether it be cryptos or cannabis or anything else, was limited to accredited or qualified investors. Now there's a move afoot to offer more and more of that to smaller investors in smaller pieces. Like you can buy $5 of Bitcoin.
Yes.
It's $5. Even though the unit is, 40,000 a unit.
Yeah, it's irrelevant.
Right? So they're carving it up. And we actually did an interview on the FourStar podcast with an executive who runs a firm in New York that does exactly that.
Oh, nice.
If you were to buy, go to Schwab or TD Ameritrade and you get involved in like small pieces of investments like that, you might be working with this gentleman's firm. They provide those services to the big brokerage firm.
Oh, okay. That's pretty interesting. So let me ask you this question. How to take risks investing and still have protection, even if we have sharp correction or market crash?
So in the public markets, that's actually a little bit easier. In the private markets, you're kind of stuck sometimes in a state or whatever.
Liquidity
is illiquid. So in the public markets, we at FourStar, we designed about 15 years ago what we call the FourStar Protection Plan, and even before I founded the firm. And as markets start to correct, there's certain signals we'll get saying the probability of a big decline is quite high, and then we'll start selling and getting out of the market. We have 4 portfolios that go either 100% cash or 50% cash, and we did that exactly last year. So in 2020, from February 19th until the bottom in May, the market was down 35%. And the technology markets were down 41%.
Yes.
It was the swiftest 35% decline in American history.
Yes.
So we got quick signals and we had to get out. Well, we saved our investors a lot of money. The market was down 35. We were down maybe 12 to 15%.
Oh,
then
nice.
Market goes back up and you got to get back in. So you got to have a signal and get back in. So that's how we do it. We have a protection plan based on probability math and trend movement. And not everybody does that, and everybody can do that. But that's how we do it. And our investors ended up about 10 points ahead of the benchmark last year because we were able to get them out for a part of it. We didn't lose money. Yeah.
So how do you do similar kind of thing in alternative investments or private investments?
It's a little harder. So if there's liquid markets, then maybe you can sell. The key is when something is going down, you have to have a pain point. You have to know how much risk you're willing to take. And if you can't take it, you got to get out. So, and if it's in real estate, you may not have that option. So you have to make sure that your investments that you can manage through that. And then also, if you really need the liquidity, you can't put as much into alternative investments. You have to be careful.
Yeah.
So that's how you manage it, manage the risk. Taking risk is not a bad thing. You just need to know what your overall exposure is.
Yes.
And then manage how to get out, right? We all do dumb things at times. We all make mistakes. But the key is to be able to get out and cut off the losses.
Yeah. No, you got to have not one exit plan. I always say that A, B, and C.
Multiple.
A is your best case scenario, but you got to be prepared for B and C, right?
Exactly.
So you mentioned real estate and your wife is in real estate. What kind of real estate deals or investments have you done?
So we've purchased rental properties in Chicago, rental properties on the beach in Lake Michigan, in the state of Michigan. So those are very popular. And then there's plenty of properties where you can buy a property that is old, needs a rehab, and you could buy it cheaply and then spend money to rehab it and then sell it or rent it out. So we've done probably all those things. I think we've owned maybe 30, 35 properties over the last 35 years.
Oh, wow.
So we're not a lot of different things. And, there's lots of opportunity in real estate. Partly is because of the leverage that's allowed.
Yes, that's
you
huge.
Can't leverage stocks like that, but you can leverage real estate like that. But there's a downside too, and everybody learned that between 2005 and 2012 was the worst real estate bear market in history.
Yeah.
So a lot of our listeners here probably had that experience or know people that had that experience. So you have to be careful to not lose all your equity in a big downturn. But right now we're in a big upturn. So, real estate prices are going up. There's so much money chasing investments, whether it be stocks or real estate or other things. So a lot of things, even cars, we're seeing inflation in basic consumer goods.
Yes.
So if you have a car, they may pay you to get out of your lease because they want your car so they can lease it to somebody else.
Yes. One of my friends just sold his used car for the same amount of money he paid 2 years ago. So he said he drove it for free for a couple of years. Like no maintenance, nothing. It's just, and the same dealer just paid him to get, because they can't produce, right? With all the supply chain constraints everywhere we saw in real estate, right? Lumber prices went up, labor, everything else. And now finally lumber is coming down because we are building development of senior housing facility, like $26 million worth of project. So that lumber price was a big factor. So we were watching for last 6 months. We didn't close. We literally closed on July 31st because we were like, it has to go down. Otherwise, our pro forma doesn't work anymore.
Yeah.
So let's talk about then angel investing also, because I'm very fascinated with everything you do. Why invest in startups and venture funds?
Well, if you take a small segment of your portfolio and you invest in startups and venture as the next stage upward, startups are really basically buying off plans. So they may have an idea, they may not even have any revenue. So you're really investing in their stage. The reason you might want to do that is because the returns, if it works well, are fabulous, right? But then again, it's just like anything else. Every deal that you do, you feel is going to be the next Google.
Yes.
Or
Facebook.
Do it, right? But the reality is there's so many things along the way. So 50% of angel deals will go bankrupt.
Yeah, more than that.
50% at least, right? And then the next 30%, maybe you get your money back.
Break even,
Anywhere from a half to 1.5 times your money, whatever. And so all the money is made in those 20% or even like 10% of the deal. And those are 5 and 10 and 20x wins.
Yes.
So the industry generally has produced high 20s returns. Angel Capital Association out of Kansas City analyzes all the angel groups out there, and they capture all the returns, good or bad, of all the angel groups in America. And the returns are still in the high 20s. That's why you do it.
Yes.
But you put it in one program. You've got to have 20 different
diversify
deals.
Again.
20,000 in this deal and that deal.
Yeah.
So at the high angels, that's exactly what we did. I'm no longer one of the angels. We did 10 years there, but now there's a new group and they're continuing to do that. And it's a lot like Shark Tank. It really is. Where people come in and give a pitch, and we decide, okay, we'll give this guy 200,000. We'll give this team 400,000. That's what we did for about 10 years at University of Chicago.
Yeah, we have a forum called, I think you may know about Keiretsu Forum. They are pretty huge. Yeah, so I used to visit there. Of course, I'm in Bay Area, so it's like where most of the startups are, like a huge number of startups. So I used to go there and exactly like Shark Tank. You have like 100 people to present in front of, and we go through the deal.
And we would be in a U-shaped conference room at University. We'd have 3 presentations. They'd come in, give their pitch. We'd all talk about it, right? We'd all vote.
Yeah, they go out and then we talk about it. Yeah, when the vote.
and there were so many people vying for money that we'd see as many between all the vetting committees. We had interns at University of Chicago. We'd see over 1,000 companies that would be introduced to us, and we'd fund 20 or 25.
Right. Yeah.
So it's really hard to get money from an angel group.
Oh yeah. So first time I invested in real estate, I lost all the money in 2015. First time I invested in startups, I lost, I would say, I had put 50,000 in different startups, and out of that, 35,000 went down the drain. So again, we will make mistakes, right? It's learning experience. But once I figured out, I haven't lost money in real estate, knock on the wood, and I have not lost any money in startups anymore. Because now I just pick, I know what exactly I want. I picked Airbnb right a year before it was going public. I'm like, this is the time for me to get in, and I just tripled my money in a year. I'm like, okay, I should be happy.
Yeah. Well, the key there is, like you said, everybody's going to make mistakes. We invested in a video store years ago. That didn't go well. I mean, so you try a lot of different things, is to keep your investments at a manageable level. So if you did lose it all, then you would survive, right? And then learn from your mistakes. And most importantly, don't lose your nerve.
Yes.
Sometimes people get wounded. Like, oh,
that's so important.
Don't get, learn from it and keep moving.
Don't get attached emotionally, right? With any investment, right? It happens. None of these guys, even all the Shark Tank guys, Kevin Harrington, or this and that, they lose money too. So it's.
Sometimes you just get surprised. We just sold our interest in YCharts, which is YCharts.com. We were the original funders of YCharts. Now it's owned by a private equity firm and Morningstar and Reed Elsevier. But we were the original investors. They had more money in, but we had early money, right? So they had the early money, but it worked out really well. That was a big one. We invested in 2 or 3 others. So you only need about 10% of your deals to do super well to make a really good return on the whole lot.
Yep. Because I have my own crypto group on Telegram as well, right? And because I do mining, and the one thing I tell everyone, so many people trying to get in crypto right now. I'm like, don't invest anything more than you can afford to lose. Cryptos are so volatile, and they are also highly liquid. 24/7, it's even worse than stocks. So if you are emotional, you will get out at wrong time, right? So if you are not ready to lose everything, then don't invest. Right? This is a game where you can go 1000x or it's zero.
It can be. Well, and you mentioned the point about making emotional decisions. Usually when you're the most stressed is when you make your worst decisions.
Yep.
Usually the investors are selling down when the market's at its low, and they're buying in when the market's at its high. You got to do the opposite.
Yeah, you have to flip the script. Yep. And I have done that when I was doing so. Again, like you, I was also doing futures and options and Forex in 2016. And I had lost, I had made pretty good at the start. And then at some point when I got emotional, I lost a lot of money. And I'm like, this is why I don't want to do stocks. I don't want to do futures and Forex where I had even more leverage to it, right? And it becomes a big deal because you're always watching the market.
Right.
So what was the reason for you dabbling in the crypto market then? Because you have done already startups, very successful, real estate successful, stocks and bonds. So why cryptos then?
Well, I felt as the CEO of my firm, and we're offering lots of alternatives to our investors, I needed to understand this better. And I said, the best way to do it is just to put money in it and give it a try. So that was exactly why I did it. And so I put in an amount of money that if I lost, it wouldn't matter.
Right.
And then 50 times what I put into it. But I expected it to all go bye-bye, right?
Yes.
So I wanted to have the experience just so I could talk about it. And if you go on the FourStar podcast, about every other podcast, we're talking about Bitcoin, Ethereum, something like that. Just because it's such a big subject and everyone's very interested in it. And part of the reason is that the governments of the world are spending so much money and they're adding so much debt that all the currencies are really scary. They're very scary.
Exactly.
There's never been a currency that's had a longer run than the U.S. dollar, and the U.S. dollar is in doubt right now. So a lot of people they used to always buy gold, but gold's not going up anymore.
Right?
So they're buying cryptocurrencies instead of gold, but they're doing something else because people are scared of the dollar. Maybe the dollar won't survive in its current form. Maybe it'll be devalued. We don't know, right?
Right.
Now we have 30 trillion in debt. 20 we had less than 10 trillion in debt.
Oh.
Crazy.
Yep. No, that's a great point. The one thing you mentioned, and I also recently read about it, and I was surprised because, of course, I'm still young. That the one thing you mentioned is the dollar is the oldest currency right now. That's a huge thing. People don't realize that these currencies go in and go out, right? It started from metal, silver, gold. There were so many. Only British pound and US dollar have stayed, but it's about time. as well. And we can see that El Salvador started. A lot of South American countries are looking into it. So it could be very interesting. And talking about the debt ceiling and everything, it's very funny. Someone sent me a joke today that let's assume you have annual family income of 21,700. You spend 38,200. You basically have to add 8 zeros to it. When you talk about US debt, new debt on the credit card is 16,500. So you are spending 38,000, 16,000 is your outstanding balance on the credit card is 142,000. And the budget card is $38.50 per month. So this is what we are doing. So of course, we keep raising the ceiling, right? There is no other thing instead of cleaning the mess. So this will continue, and you're right.
Filing it up.
So I'm worried that US dollar it's on its last legs, but you never know. We'll see.
Well, they could grow their way out of this debt if they stop adding debt. But if they keep adding at the level we're at, they're at crisis at some point.
This is what so many financial advisors talk about, that you got to clean up your debt, right? But
we can't. The credit card aren't going to go for that, right?
Right.
You have to go bankrupt, but countries don't do that, right? So.
Yeah. So let's talk about mistakes. Some of the mistakes you have made investing in alternative investments.
Well, we bought a video store right around the time Blockbuster was coming out.
Okay.
We bought in with a franchise company. We actually did a pretty good job running it, but we knew we weren't going to make money because Blockbuster came in down the block. So that's when you make alternative investments like that, buy a franchise, or you get into some other kind of business that there's things that happen to you that sometimes you can't control. And that's why angel investing is so highly risky, because there's so many things that can happen that you just can't control. And so that was probably my first big loss, was in the video store, but we came roaring right back.
Oh, that's great. Okay, let's talk about this then. Where are you seeing the most important investment opportunities right now?
Well, I would say one interesting area, and depending on how you do this, what areas got really, really hurt by the pandemic? Well, we in America, and certainly in other places around the world, we shut down basically 40% of our economy, include the entire hospitality industry.
That's
so
big.
What could you invest in? Maybe restaurants.
Hotel.
They're always risky, right?
Yes.
But it'd be a good time. And then the hotel industry didn't stop. It just collapsed completely.
Yeah. Oh, yes.
So there's lots of opportunities. Now, if you look at the stocks, the Hilton Hotels and Marriott, the stocks are already up, right?
Yes.
Already doing that. But the private partnerships are an opportunity. So if you could invest in a private hotel program where you could earn a 12 to 15% return better than the stock market, you might be able to get 20 to 25 now. So I would look for opportunities that were caused by the pandemic. And then that's, I think, one of the good ones. And I would do it through a private partnership, not through stocks.
Oh, yes. No, not through stocks. I bought Boeing shares right when it tanked. And then I sold them when they doubled in 6 months. So they are back to all-time high. I'm not into it, but I knew that those companies will make it back, right? Southwest Airlines and all. Because usually I don't do a lot of stocks, but I knew this was the time to get in and, make some quick profit.
Well, that was a great opportunity. And the cannabis world, everyone talks about that. Not a new story now. But nonetheless, a lot of things got overcapitalized, too much money chasing too few things. So then a lot of people lost money. But there's still opportunity when you think how many industries are growing at the rate that cannabis is.
Right.
Or if you invest smartly, you can probably still do well, because cannabis is not accepted nationwide yet. It's not federally banked yet. You can't put money in a federal bank. So there's a lot of impediments to growth that once those get lifted, cannabis do very well. So it's how you do it, whether you do CBD, whether you do packaging, you grow cannabis. There's a lot of ways to do it, but there's still lots of opportunity because it's a big growth business.
No, that's great. So I also recently invested in psychedelics. What do you think of that space then? Because we spoke about cannabis.
Yeah. Well, I'm not involved in that at all, but I'm sure there's some great opportunity. I haven't looked at it. I can't say much about it.
Okay. So, and last question before we take a quick break, what do you think about stocks, real estate, and crypto when everything right now is at all-time high? Do you think it's too frothy and bubbled up? It's about time to get out, or you think this will continue?
If you look at traditional measurements, the markets are pretty high. But when you look at other opportunities that are out there, and then what's been created by the pandemic with all the cash out there, it's entirely possible for the market to go significantly higher. We don't know what's going to happen. And as an investment advisor, our job is to make sure we manage the risk for our clients. But most investment advisors don't really know where the market's going to go either. So it could quite easily go a lot higher. The key is to have some sort of sell discipline and some sort of protection. And that's what we designed to make sure that no matter where the market tops out, then we're taking protection as it comes back down, because it will come back down. And eventually, the stronger it goes, the harder it will fall.
Yes. Yeah.
So and make
I
sure
keep telling people. It's a cycle, right? It has to go through that cycle. You can't, none of the market, it's not healthy for anything to continue to go up, right? No, it has to.
It collapses, right?
Yep.
The whole market's correct. And it's just natural. It's not the end of the world.
Yes.
The natural part of the capital function.
Oh, that's awesome. Let's take a quick break. And after the break, we'll go through the same questions I ask every guest.
All right.
You're listening to the Wealth Matters Podcast.
The Wealth Matters Podcast.
For more info about what we do, check us out at wealthmatters.com. It's wealth, WEALTH, matters, MATRS.com.
Welcome back to Wealth Matters Podcast. Brian shared lots of golden nuggets about alternative investments. So this was great. Brian, are you ready for fire round?
Yes, absolutely.
Would you be changing any business or investment strategy after this pandemic is over?
I will wait and see what develops. I would like to tell you I understand exactly what's going to happen. I could very possibly be changing some strategies, but I'll wait. I always say that the markets tell you stories. You just have to know how to read it. So we'll be reading and see what's happening, and we'll take our cues from the market itself.
That's great. Favorite real estate or finance or any other related book?
I would tell you probably as far as investing in markets in general and stock markets specifically, there's a book. It is right over there. I'm trying to remember the name. It's Reminiscences of a Stock Operator.
Yes. Jesse Livermore, if I'm correct. Something like that, right? Yes.
Yeah. It's all about how to manage markets and how to
it was a great book.
How to know how to do it. It's a great piece. And anyway, that's my favorite.
Yeah, that was he was one of the smartest investor at that point or stock market. And when I started investing in stock market, I read that book first. Yeah. So no, that's a great choice. Any tool or website you recommend?
Well, I would say that there's an overload of information, and a lot of it is not terribly useful. But Yahoo Finance is a very basic site, but it gives you all the basic information that you need to know. Then if you want to learn about specific research and specific market commentaries, there's so many really good investment advisors that'll let you read their information. And those are folks you can learn. There's Louis Navalier has a great site. There's a bunch of different investment advisors. Even on our website, we'll have a lot of information about, how to make decisions and what the process is. So I think you need to spend a little bit of time kind of learning what you like and learning like ways you communicate. But, a basic Yahoo Finance is fine. There's another company called Y Charts that does charting. You can learn all about how to do market charting. And all markets are the same. It all depends on liquidity and your ability to understand how they move. Right. That's why the book was such a great idea, because that teaches you about markets, not just stocks. Teaches you about markets. That's what you need to learn. Yeah.
Any advice for beginner investors?
Well, I think beginner investors have a greater opportunity than a lot of larger investors, because they can get in and out of investments quite easily. They don't have a big position to move and that kind of thing. So I just wanted to say that, smaller investors should feel comfortable that they have a better shot at it sometimes than the larger investors. I would say use the tax laws to your advantage. You can invest in an IRA, and then the money will grow tax deferred. If your company or your organization offers a 401k, a 403b, do as much as you can there as well, because since you don't pay taxes every year, then your growth is that much better every year, and it'll grow a lot faster. So I would start there. And then once you've maxed out on all the tax structures, then just save money on your own. That's what I would say. Save early, save often. I know when you're in your 20s, it may not feel comfortable saving, but I'll tell you what, if you put a few thousand away, it's super powerful compounding. When you talk, who has all the money in the world? The people who are 60, 70, and 80 years old.
Right.
But that's been around longer. So if you start saving in your 20s, it's exponential growth all the way up.
Yep. No, that's great. How do you give back?
I'm very involved in charities. I'm on the national finance team and a trustee of the Boy Scouts of America. And I know in India they have the Bharat Scouts and Guides, and this all over the world. So I'm very involved in World Scouting and the Boy Scouts of America. I'm also involved in a lot of local charities as well. We have to give back. We have the ability in capitalism in America to be very, very prosperous. Not everybody can participate because it takes some ability, obviously. So for those who aren't able to participate the way maybe you and I could, we've got to give back to society.
Yes.
Great society.
That is the key. That is the key. I keep telling that if we get the money, if we have the platform, we got to give back, right?
That's the opportunities that we've been afforded.
Yes.
And I'm a chartered advisor of philanthropy, one of about 1,000 in America. And our firm is based on philanthropy. We have a motto of build, live, share. We're all going to share wealth. When we pass away, we're going to share it for sure.
Yes.
But maybe you can share some while you're alive.
Yep.
And do good in the world for families, for children, for medical research and other things to make the world a better place.
I agree. How can my listeners reach out to you?
Well, great. Well, you can always join us on the FourStar podcast. If you'd like to see the video of those podcasts, we're on TikTok, Today's Market Explained. We're also in LinkedIn and Instagram also. And you can always call our office in Chicago at 312-667-1750 and talk to me or any one of our people, and we'll tell you all about the great things FourStar can do.
That's awesome. Thank you so much, Brian. I thoroughly enjoyed the episode. And next time I'm in Chicago, I'm going to grab some Gujarati food at your place.
Go up to John Avenue. We'll go to a Cubs game or a Bears game or something like that.
That's awesome. Thank you.
Thank you.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!